Hey Amazon seller, in today's video is kind of a bit of a break of what I normally talk about. In this video, I'd like to talk about the collapse of Silicon Valley Bank and how some of the mistakes made by management can be applied as a learning opportunity for Amazon sellers to risk-proof their business. I'm Rick Wong, an Amazon seller and also the face of LandingCube. And if you enjoy content such as this, where we geek out on Amazon FBA, I invite you to subscribe to this channel. Okay, so let's talk about the collapse of Silicon Valley Bank. I think it's all over the news in the last few days and basically dominated my news cycle on LinkedIn, on TV, and everywhere. So why is it dominated news cycle? So basically two things. Silicon Valley Bank is not a small bank, so it's the 16th largest bank in the United States, not a small feat. And also it's been like a decade since there was like a banking collapse. So I think that also dominated the news cycle a bit. And also the fact that it is the bank of choice for venture capitalists and startups and the like. That's why it's a very important part of a particular niche of a very popular ecosystem. So being in a finance major, I just really have to have my 2 cents about it. I see 2 potential missteps done by the Silicon Valley Bank management. And these 2 potential missteps, I could foresee this misstep being done by Amazon sellers and the like. So I like to talk about the 2 missteps and how it can apply to help you risk-proof your Amazon FBA business. The first misstep is liquidity mismatch. That's right. So it's also called a duration mismatch in finance terms. So basically what happens is that you have all these liabilities, like short-term liabilities, but your assets to pay them forward, to pay them whole, is long-term. A good example is like GICs, right? You are basically allocate a subset of your money, your savings, into an account, and basically you cannot withdraw it until a certain period of time. So that is the duration. And if you need to withdraw that amount early, you have to pay a penalty. So that is basically one of the key driving force that failed Silicon Valley Bank. Basically, they mismatched their liabilities. So they have like a lot of short-term liabilities, as in the deposits, right? Deposits, you could withdraw anytime, but at the same time, they invest a lot of these deposits into long-term securities. And when the customer required funding, they actually have to sell out a lot of these securities and incur a short-term loss. So that is an issue, one of the issues that caused the collapse of Silicon Valley Bank. So how does this apply to Amazon sellers? Because Amazon selling requires a lot of cash. So you always need to be on top of your cash needs. When I was doing my business, when I was running my Amazon business, I always make sure that I forecast liquidity. So when I forecast liquidity, that means that I need to see maybe 2 or 3 months out my cash needs, right? Basically, the cash is required for very important things, such as, your office, your inventory, which is a big thing, payment to potential suppliers, salary to your employees, right? And then you need to like forecast that against your future inflows, because when you're selling, right, every 2 weeks you will get an influx of cash. So you need to find stopgap solution if you have a liquidity issue. So Amazon sellers, if they grow a certain point, they would probably exhaust their savings in terms of the amount they could pay for inventories, and they need to reach out for potential financial partners. I want to show you what I did in the past in terms of forecasting liquidity to prevent this liquidity mismatch. So this way I have liquid cash to pay my suppliers, right? And also pay my employees. So in this spreadsheet, you can see like I forecast things out by dates, right? All the way for in the future 2 months, right? So that was 60 days. So you don't have to be like 100% exact in your forecast. Like that doesn't have to be perfectly match the dates, but more or less you want to know at what particular period, right, that you need to make cash outflow, as in paying the suppliers, right? Match that against the dates that you will receive the cash from Amazon, and then see where your large shortfalls are. For example, I noticed that I have a huge shortfall at this point of 71K, and I'm not going to get like my next payment from Amazon until like the next day. So in this case, I would probably foresee my shortfall like maybe like weeks ahead, and I would reach out to financial partners to get short-term loans for my inventory and pay them back when the cash comes through from my Amazon account. This is one of the issues that Silicon Valley Bank misread This is a very similar problem that Amazon sellers would have as well. So I just want to make it clear that you need to forecast your liquidity and basically forecast situations where you need cash, and when you need the cash, you're giving yourself time to try to find the liquidity to support your business. So that is very important, and that's why I want to basically mention for misstep number 1. And the misstep number 2 for Silicon Valley Bank that I see is that the concentration of the deposit base. Unlike other large banks, the Silicon Valley Bank deposit is very heavily based around tech. So basically they're very vulnerable to the tech cycles. So I also want to show you a chart right here that shows you the inflow versus outflow. So you can see like the outflow, the cash burn. So at a certain stage, the cash burn became a lot more than the inflows, right? And that caused a problem because for banks, right, they would need to have a consistent deposit base to, number 1, be able to continue to fund the business. Number 2, to be able to have those deposits to pay for other clients as well. And if the funding stops for their clients, which is the tech companies and startups, that means that they're not going to get any more deposits, and not getting any more deposit just accelerates liquidity problems that I just mentioned beforehand. Most banks, they would have a kind of like a diversified concentration of different industries. So for example, they would have clients in the transportation industry, they have like a client in the retail industry, and they have clients in biotech industry. So those mix of clients will keep their deposit in a consistent rate of growth, or even decline, it would be like more or less consistent. And the fact that Silicon Valley Bank is basically leveraged the tech boom and bust. Basically, their deposit base is also leveraged to the boom and bust of the tech cycle as well. So when the funding stops, they get less deposits, the risk of their overall business increases. So how does this apply to Amazon seller? As Amazon seller, you would also diversify your supply base. So what I mean is that you want to diversify the suppliers that you have. So let's just say you launch product A, product B, it would be a good idea for you to reach out to other suppliers in the niche, not only for you to get a better competitive pricing, but also to risk manage your business. So if something happens with your supplier A, you do have your supplier B in the back pocket. Another thing that you would want to diversify is also shipping partners. You want to be able to have the ability to switch if the opportunity arises, to also get better pricing. And also if somehow the shipping companies collapses, you have like another shipping company to be able to use. So these are lessons that I take from the failure of Silicon Valley Bank that can be applied to Amazon sellers, right? Number 1, make sure that you have ample liquidity. Don't make the same mistakes as Silicon Valley Bank, as in like tie up a lot of your cash in basically long-term assets, right? Always have liquid cash available and forecast when you actually need it. Number 2, diversify your supply base. So for banks, Silicon Valley Bank, the supply base is basically the depositors, and they were too concentrated on the tech area. But as Amazon sellers, you will diversify this particular base of your suppliers with different suppliers and also different shipping partners to be able to risk manage your Amazon business. Okay, so I think it's been like a few days since the whole debacle with Silicon Valley banks, and it seems like the government, the FDIC, has came out to kind of backstop the depositor, which is good news. I do feel like the startups depositor, I think they're kind of innocent in all this. I mean, if your company is trying to like park money in a bank, you should have a almost 100% degree of expectation to be able to pull it out. So I think it's great that government did the right thing, help the individual business. Keep in mind, they're not bailing out the bank or anything like that. They are just like helping depositors, the investors, the management. I think they will have their equity wiped out. It's just like people that has deposited with bank will be helped out. And I totally support that as a business owner. Basically, at the end of the day, yeah, I'm all for free market, but the governments are there at the end of the day for any like unforeseen situations such as we've seen with Silicon Valley Bank. Okay, so I do hope you enjoyed this video and help you assess and alert you to potential risk of your Amazon business, and basically apply some real world failings to prevent any failings of your own. And finally, if you are looking to grow your Amazon business via off Amazon traffic by building audiences, building an email list, LandingCube is the way to go. We are an Amazon specific landing page builder that allows you to collect emails and basically monitor your off Amazon traffic spends, such as Google, TikTok, and Facebook ads. Sign up now for a 21-day trial on the link below. And until the next video drop, happy selling.